So this is regarding Incoterms. This is regarding Incoterms. This slide. Okay. What is Incoterms is international commercial terms, because whenever you are dealing with the invoices, as a banker, you would like to know what are the costs that has been incurred on it, because there is a RBI guideline that the packing credit advance should be only on FOB value. So we are bothered what is the Incoterm, that is international commercial terms, because the price will vary. You will be handling the invoice based on which you have to give the packing credit advance and other advances you will be giving. So since RBI has restricted that it should be linked to the FOB, we should know. So these are though 11 Incoterms are there, the important are only FOB, CFR and CI. FOB is free on board. That means the seller or the exporter has incurred all the cost till the goods are placed on the board of the ship. Free on board is the notation we call, that is that shipper or the shipping agent, not agent, the shipper, the captain of the ship has undertaken that the goods will be taken for the voyage, ready to voyage. That is a free on board notation. That we call it practically on board notation. This is very important. Actually, two major costs are not included in it. That is the freight. If it is freight is included, FOB plus freight is equal to CFR, cost and freight. In this, insurance is not included. To that, when you add insurance, it becomes CIF, cost, insurance, freight. So FOB plus freight is CFR, FOB plus CFR plus insurance, CIF. If the customer is giving you an invoice in CIF, you have to deduct the insurance and freight to arrive at the FOB value, based on which packing credit advance will be disbursed. Another important point is the Reserve Bank of India or the Government of India is accounting the exports in FOB value. There are so many reasons for it that we do not want to discuss on it. So just for this time being, we will only catch up with the points. That is why we are, because in imports it is totally different. That is why FOB value is important. So whenever we are dealing in the invoice, usually the margin when you practically come across in the examination, normally they will also give the profit margin. That also we will deduct. As you know, as a banker, we will not finance for the profit portion and the margin portion. That is a credit terms and conditions. Suppose normally 25% margin will be there. So whatever, if it is inclusive of all, deduct the margin, deduct the profit, deduct the insurance, deduct the freight, that will give you the value FOB, based on which we will give the advance. So that is why this is very, very important. Next is another important thing is earlier 7 Incoterms, that is multimodal, it was there. This is the thing that was changed. Earlier it was that delivery at terminal. Now that is renamed as DPU, delivery at place unloaded, because there was a confusion, delivery at terminal, who has whether, because DAP and DAD, there will be some confusion. Now this is a delivery at place unloaded means other things that purchaser or buyer has to undertake that expenses. So it was, for clarity, it was changed. The only for the examination point of view, it is that is now renamed as DPU, delivery at place unloaded. So that is a change, because wherever the changes come, there is possibility, chance is there, they may ask, because whether you are updating with the changes, aware of all the changes, referring to the changes, IABF is now looking at that very particular. As a banker, whether you are aware of the developments that is happening in and around you. That is why now they are asking question related to that. Next is, these are all already you know that. Bill of exchange document, invoice is evidence of sale, bill of lading is a transport document. Here, one additional point that you have to understand is this is a document titled to goods. That is why this is a negotiable instrument by practice, or we call it quasi-negotiable instrument. Insurance is a policy document. Certificate of origin is also issued. Other documents are packing. These will be forming a part of the LC. Very, very important documents. If you ignore that, study all these things, LC and all, because these are all the times that manually you will be getting a chance to do all the LC operations. As you know, smart contracts already blockchain are in vogue. Everything is now being replaced by the system. And soon a day will come that that manual examination by the officers will go redundant. That is why we are moving. Okay. Okay. Crystallization. Already morning I have explained in detail conversion of foreign currency liability to the rupee, the home currency. Time of crystallization is as per the policy of the bank. Rate for crystallization, often they will ask anything imported, go for bill selling rate, export will TT selling rate. Then evidence of import we will discuss separately. Actually, we were supposed to finish these slides also in the morning, but no hurries.
Sir, export bill TT buying rate come sir. Export bill TT buying rate.
No, this is because a very good question you are asking. Because when you are purchasing the bill, you will apply what rate you are. When you are negotiating an export bill, what is the rate you apply? It is a bill, so it is a bill. So bill buying rate you would have applied. Say for example, $5,000 you have discounted for the customer. Now on the due date, the foreign party has not paid it. I told you we require dollars because we require a set of. So the customer doesn't have the dollar, $5,000. So we are selling the dollar to him because it is not his mistake. The foreign party has not paid. So that is a rational behavior applying TT selling rate. This is what FEDI has instructed. The rationale I have explained, don't bother if you don't understand. If you understand, well and good. That is why we are giving CT selling rate. We are not penalizing. If it was bill selling rate, the customer would have been penalized because of excessive rate. But it is not the mistake of the customer. The foreign party has not paid. That is it.
Okay, sir.
All right. Is for export bill, when you are negotiating, it is bill buying rate, because it is a buying transaction. Now, very, very important topic, that is facilities for the importers and exporters. Definitely, we can expect some more questions on it. Who is an exporter? Exporter is, in the morning I have discussed. Exporter is nothing but he is just a seller. He is only a seller, but the seller here is whatever that he is selling, that goods are crossing Indian borders. Across the country, he is selling, that is why he is exporting. And he has got so many formalities to comply with. Another short question they can ask is, who issues a IE code? Always they ask, it is issued by DGFT, Director General Foreign Trade. So this is a chain how that operates. Because the Director General Foreign Trade, they come under the Ministry of Commerce, which comes under the Government of India. So the chain is like this: Government of India, Ministry of Commerce and Industry, DGFT. This is the chain. And DGFT, another question they can ask is, they are the person who are responsible for issuing foreign trade policy and EXIM policy. Same, say it is another name. So EXIM policy or foreign trade policy is the same. And actually that is not in the syllabus, fortunately, but even then I will just add a small line on it. Foreign trade policy goes every year. Actually, last was completed by 2015-20. Every 5 years, new policy will be coming. And as you know, because of 220, because of the gravity of the situation due to that COVID, we were not able to frame the policy, because the policies are framed for the enabling exporters to achieve the export and import and other thing. It was not possible because of the COVID and other thing. So whatever that was the earlier policy, 15-20, is extended by step. And as of now, till next year, March 2023, the same policy, what was hitherto 2015-20, is extended till March 2023. And 2023, we will see government may frame a new policy. So just for that is academic interest, I have told. So that this is framed by that is DGFT. So possible questions are, who frames the FTP foreign trade policy, and who are responsible for issuing IE code, import export. Both are the answer is DGFT, Director General Foreign Trade, which comes under the Ministry of Commerce and Industry. Then regarding Reserve Bank of India, you know that Government of India, below that comes the Ministry of Finance. Ministry of Finance, the exchange control, that is FEMA has given authority to the Reserve Bank of India for controlling or the regulating all the banks. One question can be asked, based on what authority Reserve Bank of India is controlling all the banks regarding foreign exchange operations? Answer is FEMA. Okay. And the Reserve Bank, naturally, the exporters, Reserve Bank authorized persons are controlled by Reserve Bank of India, and import and exporters are coming to the authorized persons for their export needs, trade activity, trade finance. So that is how the chain comes. Government of India, Ministry of Finance, Reserve Bank of India via FEMA, and Reserve Bank of India, Reserve Bank of India through FEMA authority control authorized persons, and authorized person control the traders, that is importers and exports. So that is how the chain works. And this is export declaration form. Now that earlier form is not there, now everything is EDA.
EDA so is chain will be asked.
No. That's for you to make understand. Any questions you will be able to answer. You know the chain. Then who is on what basis RBI is controlling? You can write FEMA. Everything you can write. You know the chain. It's very, as a banker, you can easily understand it. Nothing to study on it. Just familiarize. That is enough. Then any type of question they ask, they can definitely, you will be able to answer. Okay. So EDA is electronic data interchange. That is computerized. Now all the seaport and airport are computerized. So only questions is, now how you know the share, that is the value to be repatriated, because you are not seeing the exporter. Exporter goes to the customs authorities and he is doing the export and he is coming with the documents. Then what is that authority? How you come to know that genuineness of the documents, whether that is exported, what is the value he has exported, where he has exported, which vessel has gone, who is to be notified, what is the value of foreign exchange, what is the value to be repatriated, period, everything, name of the vessel, everything, entire detail is in the statutory declaration form. Now that is known as shipping bill, SB. So that will have all the I code, everything will be there, entire horoscope will be there. So that is the main declaration form, the export declaration or statutory declaration form issued by customs authorities. When he brings that, you will come to know, okay, beautiful. What is our role will be clear. What is the value to be repatriated? Everything will be in the statutory declaration form. Now that is a shipping bill. Everything is now computerized. Then here another thing they can ask in the examination, soft text. That is a software exports issued, that is issued by the Ministry of Electronics and Telecommunication. Through the system, you will be getting that. You will know the value through that. Then normally the FEMA says you are not supposed, any person in India is not supposed to export anything free of foreign exchange. Whatever any goods that goes from India, FEMA says the corresponding value foreign exchange should be received in India. Nobody is authorized to export that free. Exemptions are there. So these are trade sample, personal baggage of travelers, and gift up to 5 lakhs. They will ask, earlier it was 3 lakhs, now it is 5 lakhs. For this, statutory declaration form is not required. These are the only exemptions. For all other things, we require the shipping bill. And exchange control copy, already we have seen, within 21 days from the date of shipment, it should be submitted to the authorized persons or authorized dealers. Time norms, they will ask, that is why we have taken AP should be given 21 days. And realization, this is very, very important. Only 2 things they will ask, that bear in mind. Now, because earlier, because of the COVID and all, so many changes were coming. Now that entire changes have gone, absolutely only 2 things you have to study. Any export, the process should be realized within a period of 9 months. Now only 9 months. You do not bother about coding. Earlier 15 months and all, you don't bother. Now it is not there. And wherever the warehouse is established outside, example, minerals and metals and mineral and metal trading corporation. So they will have huge value. For that, it is permitted 15 months. This also was earlier. Now these are only the 2 norms. Warehouse parties 15 months repatriation period, all others 9 months. And value credit in Nostro is known as the value credit realization date. And the proceeds of the payment, practically you will be getting a Nostro credit. That is how 99% comes, 99.99 comes. But theoretically, we will go, even you are permitted to accept all the payments, currency, INR credit, everything is allowed. Credit card, online payment, everything is allowed. But mostly 99.99% only Nostro credit only comes. So that is easy to operate, In ACU countries, you know that these are the ACU countries. Here ACU dollar means it is not a separate dollar. This is US dollar only. And also ACU or ACU only is normal European euro only, euro currency. Only for the RBI to
Hello, sir.
Hello, sir.
There's a no voice, sir.
Hello. No voice. Network is not there, I guess.
Please wait. Some connectivity issue only. Please wait, man. Please hold. Need to log in again. Hold, please wait. Sir is logging in. Yeah, Ramesh sir.
Kattaile.
Yes, sir.
So far there was no problem. Suddenly.
Okay, sir. Okay.
Okay. Okay, right. Then crystallization already we have seen, export to TT selling rate, because whenever so many changes comes, I go through the circular RBI site and update. So there could be some repetition, please excuse. And TT export crystallization is actually there, that is our exchange risk is protected. Morning I was discussing you purposes of crystallization. And the facilities for export packing credit at attractive rate of interest. RBI has given specifications, but they are benefited at competitive interest rate. And the benefit is discounting of export bill. Any export bill customer comes, we have to discount it. And also EFC, exchange earners foreign currency. This is a foreign currency account enabled for the exporters. Whatever proceeds that has been received, 100% of the amount we can keep it in current account. Any payment that for imports can be taken from that amount, so that they will not be exposed to exchange rate risk fluctuation. PCFC is a packing credit in foreign currency. So there also the interest benefit is there. Then gold card scheme is a special scheme allowed by Reserve Bank of India, Ministry of Commerce, where they get the preference. A person who has got good track record in the exports, they are eligible for the gold card scheme. There they have got three benefits. That is, number one, their proposal should be speeded up. Any ad hoc limit should be given immediately. Renewal of the limit also should be immediately given. They should not be denied. Another thing, they should not be in respect of collateral security and all. They should be given preference. That is, bank can compromise. That is bank's discretion only. RBI says only, we need not be strict. The RBI never says that you should not accept collateral security. Bank can take a ease view. That is the point. It's a credit decision. And booking of forwards already, you know, that also is a benefit. These are the benefits given to the exporters. Then already morning we have discussed the booking of forward. Morning I have discussed, if you have got LCR confirmed order, 100%. If you are not having, based on the last 3 years average or actual export turnover, whichever is higher. Only condition is 75% non-deliverable. He can cancel if he want. But above 75%, he has to compulsorily deliver it. This is the only point. And it will not be out of place to mention, even for individuals up to $1 million, you are permitted to book forwards. That is everything. The period also is April to March financial year. Even for individuals, it is permitted. Then agency agency commission. There is a commission to the overseas agents. If it is whatever is mentioned in the shipping bill, you can do it. You can permit. It is as good as allowed by the customs authorities. If it is not mentioned in the shipping bill, how much you will allow? The RBI says in line with the practice. Whatever is the practice in vogue, comparable, same thing. You have to verify the agreements. You are satisfied, we can pay the agency commission. And reduction in invoice up to 25% of the invoice value, we can give on our own without referring to RBI. Suppose $1,000, $10,000 export up to 2,500, 2,500, you can give reduction, but subject to genuineness. That RBI says, subject to genuineness, and for whatever duty drawback, if he has received, that also should be surrendered. Then we can, without refer, because the point is, whatever that each and everything we have to refer to RBI. Now it is not there. Everything is, all the entire ball is on our court, AP. We can do it on our, but genuineness is the point that we have to ensure. If it is above 25%, then we have to see the genuineness, take a certificate. So if it is more than 25%, there is a limit is there, up to 5% of the past 3 years average turnover. So suppose I told you in the example, $10,000 is the value to be repatriated. Up to $2,500 being 25%, we can on our own give it. If it is above that, if it is say so $4,000 reduction, then we have to see if that amount is less than 5% of the past 3 years turnover. We have to get a chartered account certificate, then we can give. Extension of time, normally all the export process to be maximum is normally 6 months. Maximum period is 9 months. I told you. First slide it was maximum period only is 9 months. But normally up to 6 months we can give the extension. Suppose a bill is sent. It is the period is 30 days. Suppose it is not realized within 30 days, we can give extension. Suppose the party says that, sir, definitely give some time. We will definitely the proceeds will be received. So after we can give an extension for 6 months. That is up to 1 year we can give without referring to RBI. And only that, important is we have got a EDPMS is there, Export Data Management Processing Monitoring System. There we have to form ETX is there. There we have to report to Reserve Bank of India when we are giving extension of time. This is one of the most, 3 statements are there. Often they will be asking. One is ET extension of time. Whenever authorized person or dealer is giving extension of time more than 6 months, we have to, whatever is more than the normal period, we have to report it there. The limits write-off, the eligibility is up to 10%. The main point is whatever duty drawback that he has obtained, that should be surrendered to the DGFT. The diamond dollar account, often there will be questions on it. A person with good track record, 2 years and turnover 3 crores, always they will be asking. What is a diamond dollar account? Suppose the diamond, you see, import will be done. Raw diamonds are imported mostly from South African ores and all. So huge crores and crores has to be paid. And after that polishing, it will be exported back. So only the difference will be the profit for them. That will be huge amount. So because if the huge amount is involved, if you are going for conversion at the time of import and export, you are likely to affect by the exchange rate loss. To avoid that, they are permitted to maintain in current account whatever proceeds that is received. Maximum 5 different accounts can be maintained for a good track record person, and in current account no interest. Here that stipulation is, suppose whatever amount that you have received in January, that the foreign currency should be used by the end of February, next succeeding month. If you are not utilized, then what you have to do is you have to convert to INR. That is it. Because the rationale is we should not use it for speculation purpose. EFC is normally by exporters. This is also 100% of the export proceeds can be maintained in current account, and the credit to be utilized before the end of the succeeding month. Rationale is not to be used for speculation. RFC, that is a person who is returning from abroad. Naturally, morning we have discussed that all the accounts should be converted to INR, but except the FCNR. But here, suppose you want to maintain that in foreign currency itself, it is permitted under this scheme. And this is the only account maintained by a resident individual in foreign currency with his interest bearing. All others are interest free. Current account. This is the only thing, current account, SB, FT, everything we can maintain. The interest will be very nominal. Possible question they can ask in RFC is, whether the amount in this foreign currency, this is in foreign currency you can maintain, whether it can be repatriated. Answer is, once this person gets back this original status, that is non-resident, once he goes back to foreign country, his status is non-resident, then you can repatriate. Resident, the foreign currency domestic is by residence, non-interest bearing current account. Suppose you are doing, I am taking a class in, say, overseas, Dubai, in New York. I get some fund, small amount. That also, if I want, I can keep it in foreign currency. For buying some books or anything, magazines, I can utilize that. So this is all. These are the major account. that can be resident individuals can maintain. Then export finance is actually the export finance is bifurcated into mainly two things. That is before shipment, that is pre-shipment, and after shipment is post-shipment. And most of common is pre-shipment is EPC, export packing credit, or some banks call it packing credit. So this is a working capital facility. The assessment is just like our cash credit. This is a cash credit only, purely cash credit against stocks. Only that the rate of interest is very attractive because RBI has this comes under which segment it comes export? Can you tell me? Which segment of the classification? Very they can ask question. Priority sector. Priority sector in which segment it comes? MSME. It comes under MSME. For manufacturing unit. So all the shipment manufacturing, the exporters will be in the manufacturing unit. So they will be finding a place in MSME, whether the classifications are there. Okay. So then advance second receivable, any check or advance payment received, that also is classified as pre-shipment finance. Oh my God, I will close it. Okay. Then the EPC can be in two ways. Order to order, which means one to one. You get an order or an LC, pay 75% or whatever is the margin. At less margin, you pay that. When the exporter is done, you adjust the amount towards that. Or running facility is for satisfactory customers. It will be pooled account. You'll just like a running account. All the orders will be accumulated. Against that, less the margin, we will be giving the advance. So see, we have to be very careful. Actually, in the credit class and other thing, only this is very important. For us, we have to understand there is a running facility for satisfactory customer. That is enough. Period is depends upon the nature of the product. Maximum is 360 days. Now, normally it will be related to the products they are handling. Rate of interest is concessional rate of interest, but actually it should not be below the MCLR or whatever is the bank's rate will be there. It should not be below that. If not close to 60 days, the normal actually. Maximum period I told you, these are all a concessional rate of interest advances. Suppose a party is not giving, he is taking more than 360, instead of 360, he takes 390 days. Then we will be charging the OD interest for the entire period, not for the extra 30 days, but for the entire 390 days, we will be charging it. And the limit is very, very important. It is based on FOB value. Packing credit advance always is given on FOB value, as I have told you in the opening screen. And EPCL export packing credit is requirements, KYC, IE code is compulsory, KYC norm is now RBI is very strict. Instead of in addition to the KYC, there is also a trade KYC. You read the circular, RBI is because of the so many frauds that has happened past 2-3 years. So many that fraud running to crores. The RBI is very strict about the trade KYC. And also RBI has implemented due diligence policy. Due diligence. Merely we should not go by the document. We should correlate whether the documents are genuine, whether that matches the party's turnover. Example I can tell you because it's very important. Suppose a customer is giving you 1 crore cash remittance. You should correlate from where he got this 1 crore. Whether he has got turnover to that extent so that he can remit 1 crore. Like that, we should probe. Merely that he is giving, he say, oh, he is a customer, he has got KYC, he has got IE code. I will accept that money. Like that, we should not blindly do. We should correlate. That is what due diligence policy says. What is due diligence? That depends upon case to case. Not in the any advance that party comes, two things we have to verify. They are not in the specific approval list of ECGC. If he is in the ECGC, they will be cautioning defaulted customers, suppose NPA parties and all, already they would have cautioned. Only after getting the approval we can give. Now the caution list of RBI. Now the change is any party who has not received the proceed even after 2 years, as authorized dealer, you can put him in the negative list. You can delist him. You can put it in the caution list of RBI. And after the amount is received, you can change it. Even that party is now vested with the bankers. You can, after 2 years also, you are not getting that amount. You can blacklist him. You can put him in the negative list. And these should, whenever we are giving an advance, always you should have a firm order or LC. Normally, firm order will be only given. LC will be coming only at the last. And advance is given only on FOB value, as I have told you in the that Incoterms. I told you whatever is the insurance and freight and the margin, profit, everything we have to deduct. Export finance, the post pre-shipment is over. Post shipment is done after the shipment has taken place. Normally will be purchase, discount and negotiation. What is a purchase? That is side bills or demand bills are purchased. Usan's bills are discounted. Bills under LC are negotiated. This terminology is very important from the bank's point of view, because the security that you will buy for a party who has got all the bills purchased, side bills, or all the bills Usan's, will be totally different. Can you tell me, out of academic interest I am asking, can you tell me, as a banker, where the risk is more? Already the risk also is over. In respect of a customer who has got all the bills on side basis or demand basis, or the risk is more on a customer where he is submitting all the documents on Usan's basis, where the risk is more? In purchase bills or discount. Suppose one party is requested for say bill discounting limit of 5 crores. You analyze that all his bills are on purchase. Another customer, you see that all the bills are discounted. Where you will be requesting for, where the risk is more? Because depending upon the risk, you will ask for more collaterals. Can you tell me where you will be asking more security? Where the risk is more? You will leave about the collateral security. Because where the risk is more as a banker, in purchase with side bills or in the Usan's bills? Fast. Okay, not answering, then I will tell. In discount bills, because you are parting with the documents. Parting with the documents is a Usan's. You will parting with the document, the risk is more, you will ask for more security. Advance against duty drawback also, that falls under post shipment. Advance against collection bills also, we are classified as post shipment. And requirements is KFC, IE code compulsory, as in the earlier. And not in the specific same ECGC, blacklist, caution list of RB should not be there. And no, and how much period is for side bills? 25 days. This is a normal transit period. Usan's bill, normal transit period, Usan plus Usan. That is why we have written inclusive of normal transit period. Maximum 365 days. This I have seen some place it is 360. I did not go for verification. Most of the place it is written 365 only. So I have taken 365. One or two places I have verified this. It is seen as 360. Okay. Then this is export credit in foreign currency. Because it is beneficial for the customer, that is the rate of interest is very compromised. That is what is competitive. They're competitive. So please, if the requirement is, it is permitted to release in all permitted currencies, but from where you will give foreign currency? That is, you have got inflow by way of EFC, FCNR, deposit, RSC. These are the inflows through you get. And also major is line of credit, overseas borrowings. Out of these funds you can give. And the prior depending upon the priority. Here, important. First preference will be for the gold card status exporters. The earlier slide we have discussed about gold card status exporters. There you will be giving preference. They have got preference. Period is maximum 6 months. And interest is that Reserve Bank of India, instead of that LIBOR, now what is now that average rate is there. That the AIR, that's what we call. This is given by the given by Fintech Benchmark India Limited. That is in tomorrow's class I will explain. It is a joint venture of Indian Banks Association, FEDI and FIMTA. So that they will give the rate.
Sir, that is ARR, sir. Alternative reference.
Yeah, alternative reference. You are perfectly right. But everything, so many things, extember, I will jumble. So thank you. Alternative reference rate. That is it. Excellent. Thank you, because I should not repeat the mistake. It is given by the Fint. Okay, thank you. Alternate reference rate. The only point is PCF should be liquidated whenever a bill is discounted, which is for that he has availed packing credit in foreign currency. We should discount it also in foreign currency. We call it export bill rediscounted, or because the terminology is like this, rediscounted. That's why we are using export bill rediscounted. And the point that we have to bear in mind is, he has availed foreign currency, he has availed the packing credit in rupee, means he cannot discount in foreign currency. Same currency should be only done. And also you should not change that. So many things are there. In credit, actually in PCFC and all, in credit that subjects is a very carving of limits. So many things are there. But for us, it's a very simple only. Now this is also that I have taken maximum objective questions. That whenever that you are doing an import finance, you should take a 10.5 declaration 10.6 aspect. This says that he will not misuse the forex. He will use the forex only for approved purpose. If you have taken this, you are saved. If you have not taken, you are totally mess. What is this? Our position will be total become open. We will be exposed to the disciplinary action risk of the bank. Anything happens. So always better we have to go for this declaration. It is his funeral. You have to get a declaration stating that he should use that, he will use that amount only for approved purposes. So always bear in mind, it's very important. More than the examination, if you are in the forex desk, this is very important. Then the IE code is given by DGFT, already we have discussed. And when a person is coming for imports, we got three types we have to see. Whether if it is a banned goods, we should not permit. Where you can see, you can verify all these things in the, can you tell me, a customer is coming for imports, we are supposed to, because first he is coming to you. In exports, you are not bothered, because directly goes to the customs authorities, they will verify everything. And you are satisfied, you will get a statutory declaration form. Shipping bills, you are getting absolutely happy. Your case is totally protected. You are responsible only for a repatriation of the proceeds. But in import, you have got a larger role. Because the customer is coming to you first. You have to pay the money. Advance remittance you have to give. For that, you are the responsible person to verify. From where you will verify what is the item he is going to planning to import. Is it a banned item, restricted item, or open general license? Foreign trade policy, we have to verify.
PO,
Banned item.
purchase order.
Not purchase
Fixed
order.
code.
No, I have told the answer. Foreign trade policy, FTR. First slide I explained. That is very, very important. Because banned item, just human skin, peacock feather, any other thing. Suppose we are sending a remittance, then our totally life in the bank is totally gone. Restricted item, suppose they have to get the concerned ministry's approval. I will tell an example. Suppose one party is coming to, sir, we are going for a cultural dance program. 50 persons are there. Release this foreign exchange. They have to get the Ministry of Cultural Affairs, their permission. Based on that, you can release. OGL is open general license. They are not required. From where you can see in the FT that foreign trade policy, that HS code will be there, all the items. Only those items that finds a place in that OGL, that alone we should permit. So that is why these are all things very, very important. And the entire things we can find out in foreign trade policy. Import authorization, or import license. Now we call it import authorization, same as import license. This is issued by question, they will ask in the examination, DG Director of Foreign Trade, and this is in CAF value, cost insurance right. In export, it is FOB and FOB, free on board, and for import, it is CIF, because we have got a concern, we have got a insurable interest in the goods, because you have already paid for the goods. As a banker, you are interested in the safety, it should reach safely. That is why we will be accounting in both freight for that shipment or air shipment, and also insurance will be. That is why we are accounting in CIF value, because we have got interest in the goods, because already we have paid advance for it. Documents to be obtained as an evidence of it. Bill of entry. Whenever the payment comes to you, you make the payment, and within normally the 6 months, we have to see that the amount is repatriated. So what is the proof that the goods have come? When the goods reach Indian shore, the customs will be issuing a bill of entry. The goods have entered the Indian shore. Now everything is done through the system. I will explain that in the next slide. The time now for import payment is very, very important, 6 months. Earlier COVID period and all, some relaxation were there. Now the total is gone. And that okay. Then 6 months. And exports 9 months. Already have to do. Export 9 months, import 6 months. Often they will be asking. And Indian currency, a customer when he goes from India, he can take 25,000 INR with him. And whenever he comes back, that amount, actually the amount will not increase. Maximum is 25,000. Earlier it was 7,500, 12,500, so many changes. Now it is 25,000. And payment of imports, you can, that is, now it is permitted to by credit to non-resident account of the exporter with the bank in India. That is, morning I have to wash my through a Vostro account. Through a Vostro account is permitted. And normally the payment to a third party for imports, we should not give. We cannot pay to a third party, only to the concerned party. Whenever we are making an import, only to the buyer or the exporter, we have to make the payment. But if it says that the payment has to be given to a third party other than from the buyer, then we should verify irrespective purchase order should be there, one tripartite agreement should be there. Most important, the bill of entry also should mention the third party to whom we are in order in making the payment. This is only for academic interest. I don't think they will be asking question, but most questions will be asking on the period, this amount, bill of entry. And the payment of advances. Last time I think they asked it. So this shade I have added, already I have shared the slide, and this slide I think I will check up and I will share it today itself. So
it is not there. It is not there. Please.
I will do it.
Please, sir.
I will, because this entire thing I was working, because for your convenience, whatever input data I can do, I was doing that. I will
Thank you, sir.
I will do it, no problem. I took it from so many other places, because I came to know that 2-3 persons told me that this question was asked in the last examination. Usually I used to tell, okay, but every year they are going additional. Earlier they will not be asking, only for that forex based certification program only they were asking all these things. All the questions that was asked in that examination, now they are including for CAB. And so those questions they were asking in CAB, now they are asking in JAB. Like that, they are upgrading. So advance remittance up to 2 lakhs, no formalities you can give. If it is more than, you should get an unconditional standby LC of a foreign bank, naturally. And if a bank can have a frame line that up to 5 million, we do not insist on such LC. If a board has taken a decision, then without this bank has given. All the banks would have taken, because there is an RBI instruction. And for PSU up to 1 lakh, no guarantee. If it is more than that, you have to ask for a guarantee. Otherwise, they should get an exemption from the Ministry of Finance. Here, actually, they were examination, they were asking this 2 lakhs. Up to 2 lakhs. If it is more than 2 lakhs, you have to insist for a standby LC, normally. Otherwise, if I got a board approved policy is there, you need not insist. So that is the only criteria. And for the services, limit is slightly different. It is the 500,000, that is 500,000 VG. If it is for public sector, same 100,000 or 1 lakh. If it is if you want exemption for bank guarantee or standby LC, Ministry of Exemption, Ministry of Finance should be obtained. And receipt of the document by the importer direct from the overseas supplies. If this is also, they can ask in the examination 3 lakhs. Up to 3 lakhs, we can permit the direct from the overseas supply. Normally, from the bank only we will be accepting. This is an exception if the amount is less than this amount. Evidence of import, I told you. Exchange control copy of the bill of entry within 3 months from the date of remittance, we have to get. So whenever that you have given, say, example I will tell so that it will be easy for you to understand. Suppose a customer is coming, sir, I want $10,000. I am going to import. Okay, you can give based on, you will be verifying foreign trade policy. Okay, everything good. It is a permitted item. No problem. You can send the remittance. How you send the remittance? Now it has to be sent through the system that you have got, that import data processing and monitoring system, IDPMS. Through the IDPMS, there is a menu called ORM. That is outward remittance mode is there. Outward remittance mode. Through that only we have to send that. Through that we have to send. Suppose the goods are not received within 3 months, we can give an extension another 3 months. 3 plus 3, 6. Without referring to Reserve Bank of India. But if it is not received even after 6 months, we have to report to Reserve Bank of India through IDPMS in this BEF statement, Bill of Entry Forwarded Statement. So this is the second statement I told you. Number one is extension of time. Second one is Bill of Entry, wherever the Bill of Entry is not received. Another thing is XOS state, export bill outstanding. Any export bill outstanding more than 6 months, we have to report in the EDPMS, Electronic Data Processing and Monitoring System. So three statements always they will be asking. I will repeat. BEF statement in IDPMS in respect of bill of entry, extension of time that sheet in the EDPMS for giving extension more than 6 months, and XOS, export bill outstanding in the EDPMS. Whenever it is not received after the due date, any bill that is not received on the due date, earlier entire thing was manual. Now through EDPMS and IDPMS, and extendable for 3 months. I told you. Crystallization board bill already as per the bank's policy. Payment by creating ORM, outward remittance messaging system is there in a bank. Every bank it is in the IDPMS, and whenever I will tell the example so that you will be clear. A party is an importer is coming to you for say I want to send $10,000. You will see KYC, trade KYC, then IE code, everything pakka. Okay, we verify that it is a permitted item, OGL. Okay, you send the $10,000. It will be recorded in ORM, outward remittance message in the IDPMS. Whenever goods is received, what is the time period? 3 plus 3, maximum 6 months. If it is received, then it will customs will be issuing a bill of entry. Now, that also they are doing system. So the customer will come to you and advise you, sir, already the goods have come. You can refer the bill of entry. So there is a bill of entry master in the IDPMS menu. From there, you recall that. You will find that correlate with this 10,000 advance. This is where the import invoice number, everything will be tallying. Then you outward remittance, you will be matching through the IDPMS. So the entry will be wiped off. It will go to the Reserve Bank of India. Till you wipe off the entry through ORM, through that initial advance, with the help of the bill of entry received through this, that liability will be importer will be outstanding. That ORM is applicable only for physical imports. Non-physical imports, it is not applicable. Only that suppose you have for software you are given some amount. How you know the party has installed the software for which you have made the payment? Get a certificate from the chartered accountant stating that it is installed, and you should be able to correlate with that advance that you have given. That's a natural. As a banker, we will go by that only. And any import payments, any release of foreign exchange, we call these two forms are very important. A1 and A2. Early A1 was connected with imports. Now it is dispensed. It is not there. A1 is dispensed. It is not there. Instead, RBI says the bank can formulate their own policies of A1 and you can get a form. That is a RBI regulation. A2 is other than imports. Whenever you are making payment above $25,000 only, you should get A2. Up to 25,000, RBI says you can get a dummy A2 from the party. Which will have all the party. Now that we have to get that, because otherwise you will not be able to remit it in the system. Everything you have to put it in the system. Everywhere we have got only software package for all export transaction. That will not move unless you fill all the particulars. Okay, but for the theoretical purpose, we will examination purpose, A1 is dispensed with, A2 up to this 25,000. Wherever this benchmark limits are there, the possible chances that they will ask. And XOS bill, I told you, wherever the bills are outstanding, all outstanding bills. Here most important is including collection bills. Including collection bills, we have to report. Because we have got, whenever you are dealing in export, you have got two responsibilities. One is credit responsibility, credit risk. Another is FEMA responsibility of FEMA risk. Even for in a discounted bill, we have got both the responsibilities, but both the FEMA and the credit risk. For a collection bill, you don't have any credit risk. You are not partnered with any amount. But still you have got that FEMA liability is there. You are responsible for repatriation of the proceeds. So you have to report in the XOS if the collection bill also is outstanding more than the due date. FBC, I told you, XOS we have to report. All imports can be now invoiced in INR. That's a change already I have told you. An online payment gate service up to 2,000, it is permitted. We can approve gateway, we can make the payment. And FEMA regulation, that special VAS token can be opened for settling trade transaction. So this is a circular just I have given. And reduction in invoice, already I have difference. That is, there can be difference up to 5% in the bill of entry value and invoice value. This is actually a great boon because I was working in a B category branch in Tirupur, Tamil Nadu, where actually I paid the amount, I released the advance. And when the bill of entry came, there was a difference by 1 cent. 1 cent. 1 cent is $0.01, 1/100th of a dollar, equivalent to 1 paisa. It was only the difference, but still then the auditor wrote that invoice value and bill of entry does not match. He wrote like that. RBA, the query came, then we replied with the copy that there is only a difference of only 1 cent, $0.01. Okay, then case automatically vanished. But whenever I see this, I recollect that. Bill of entry to be preserved for 1 year for the verification of our auditors. That's a normal thing. Already this we have, it's a duplication only because I was collecting that earlier data from so many other slides. I just pasted that.
Sir, the difference 5% more or 5% less?
Yes, what difference? Yes, it is satisfactory. They will not ask it, but still then I took it. Permitted. Then factoring and forfeiting. Factoring both are that finance, receivable finance.
Sir, on note, sir. The yes. difference point not to send now are we permitted or?
That permitted. They were laughing.
Permitted, okay.
Permitted.
Okay, sir.
But that was
okay,
very serious. That's why it is not out of place to. So many case studies are there. 11 years I was in Forex, but unfortunately the time doesn't permit. So I am not able to. Otherwise, in the normal class, I used to quote so many practical cases so that you will be remembering, not to bore you, so that when we tell something like that, it will help you to remember. Otherwise, right from the morning 6:30, you are all strenuously sitting. That is a big great thing. And factoring and forfeiting. Factoring. What is a factoring? Whenever a person you got a receivable, a person will come. It's an arrangement whereby he will give 80%, 80 to 85. That's what factoring says. Normally will be 80% you will be giving in advance. In return, you will be assigning the debts in his favor. So he will collect it on the due date and give you the balance amount. So this is the arrangement. And what is the benefit for the factor? He will be getting financial charges and also the service charges. Both charges he will be getting. And there can be, the difference is the point is, the problem is on the maturity date when he comes to the debtors, suppose they do not make the payment, two things are with recourse and without recourse. He can come to that original creditor. He will return the amount. Without recourse means he cannot come to the creditor. He had to file it. Already I have assigned the debt in his favor. So based on the bill of exchange, he can file a suit. Now in India, we follow only without recourse. With recourse is not there. Only with recourse. Without recourse is not in India. In respect of forfeiting, it is nothing but a factoring in an export-oriented unit. Here, the 100% will be immediately given. The party, there only 80%. Here 100% will be given, and that too without recourse. Without recourse only in India. So you are protected. A forfeiter, as per the forfeiting arrangement, the creditor will be getting 100% the amount, that too without recourse. Suppose the foreign party doesn't make the payment, it is the funeral of your forfeiter. He has to take up. These are only for the examination purpose I have differentiated, but practically this factoring will be happening only for small cases, and forfeiting will be happening for large 7 to 10 years like that. And usually it will be running to big amount. Usually the Exim Bank will be acting as a forfeiter. Only such cases, so there will not be any return cases. For the examination purpose, the differences are here it is 80%, forfeiting 100%. It is with recourse, it is without recourse. And ADR, GDR, these are American Depository Receipt and Global Depository Receipt. So American
difference between with recourse and without recourse.
This is with recourse means in case the debtor doesn't make the payment, he can come to the creditor. Here he cannot, without recourse, he cannot come to the creditor. The forfeiter has to proceed against the debtor directly. Okay? In ADR and GDR, American Depository Receipt. What is an American Depository Receipt? American Depository Receipt is a receipt issued by a bank in America known as Depository Bank. They will issue a receipt that is known as Depository Receipt. What is that receipt? That receipt issued by that bank will represent fixed shares of a company in India. Say example TCS. They want to sell some stocks, shares to a foreign person. get money, they will be getting money. So instead of transferring this 500 shares to a foreign person, that can be kept here in India. Against these 500 shares, one receipt will be issued there by that foreign bank that will be traded. And this 500 shares will be held by the custodian, who will be the agent of the foreign bank. So that is how that operates. And this is denominated in dollars, and GDR is denominated same thing only. That is a global deposit, both in that Europe and also in US. And this is denominated both in dollar and euro. ADR is only in dollar. That is, it's convenient. It's similar to our bankers, the Harshad Mehta scam and all. Similar to that. So it is easy to operate. Here, that point that we have to bear in mind is, in ADR, the actual shares are held by the custodian. That's an agent of that actual deposit receipt holder, that bank. They will be in India. So the bank TCS can pay the dividend to the custodian who is in India. So the exchange risk is mitigated. So that is a most important point. He need not make the dividend in foreign currency to the foreign person who is holding, because it will be paid to the custodian. So we are paying the TCS is making the payment of dividend only in INR to the custodian who is in India. So they are protected from the exchange risk. That is from the forex angle I am explaining. ADPMS and IDPMS, I told you, this is a export data processing and monitoring system. This is IDP, import data processing and monitoring system. Customs are members, RBI, customs and AIP. The three parties, they operate on the, so that the importer and exporters, they are totally caught in between, that they cannot mug up anything. That's a thing. Next is ECB, facility to the importers. ECB, external commercial borrowings. The possible question they can ask is, it can be availed both in, what is our time? We have got time up to 7:15, isn't it? Can I take up to 7:15? Or as you say, because today already you have
Yes,
got,
sir.
Yes,
as
sir.
you say,
Yes.
option is
Carry on,
yours.
sir. Carry on.
Okay, very good, very good. Thank you. I really appreciate your enthusiasm. So this can be availed in both foreign currency and rupee. Period is 3 years. This is important because any borrowing more than 3 years, we treat it as ECB. Any borrowing less than 3 years, we treat it as trade credit. So the differentiation between ECB and trade credit is in the period. If it is more than 3 years, ECB. If it is less than 3 years, it is trade credit. Number one. Number two, as I told you, this is in both currencies, foreign currency and INR. And here the benchmark limit is there up to 4.5%. That is 450 basis point is 4.5% above the benchmark rate. Benchmark may differ. Instead of that LIBOR, tomorrow we will see, instead of LIBOR, now SONIA rate is there. Just like that, our alternative reference rate, SONIA rate is what now prescribed. So better we go for benchmark rate plus 4.5%. Now, that examination question, very important, is ECB up to $750 million, we can give automatic route. It is our discretion. Above 750 million, we have to get the approval of Reserve Bank of India. This is where we will be studying about the tomorrow capital account convertibility. This is a perfect example for capital account convertibility. Up to a certain point, we have got powers. The $750 million, they will be asking. One change just that has come is, this is doubled. Up to 31st December, 1.5 billion we can give without referring to RBI. And the cost is this plus 1% also they have raised. That is, instead of 4.5, 5.5. I don't know whether they will ask it in this present examination, because this is only recently, only 2 months back only they have increased it up to 31st December. But just watch the question, depending, because if it is 1.5, that will not be there. If your 1.5 answer is there, you can very well go for 1.5, because it is applicable. It will be a good point that you have understood the changes that is brought by the Reserve Bank of India. Normally, they will be asking 750 million. This automatic route. Above that, approval route. Get RBI permission. And the prepayment attracts 2% penalty. LRN, because whenever we apply, it can be availed. The customer can avail only through a authorized dealer. When he comes to you, you have to, the approved forms are there. That is loan reference number we have to obtain from Reserve Bank of India. after getting the LRN number only, because even if you are the parties allowed to borrow from abroad under the ECB, RBI has got the control. That is why they are requesting for LRN number. Only after that we should allow that. And changes from foreign currency to INR is permitted, because I told you already ECB can be availed both in foreign currency and INR. You can avail in foreign currency, and if you want you can convert to INR, but vice versa is not possible. You avail in INR and you cannot convert in foreign currency. That will be a loss also, that we will not debate on it. Just learn that is enough. From foreign currency to INR, it is permitted. That is enough. Exchange risk on the Indian borrower. So because whenever you are having a foreign currency, you have got a responsibility to pay it back. So RBI says, put a stipulation, whenever you are buying in foreign currency, you have to hedge it. How you can hedge a foreign currency loan? Can you tell me? You should be able to answer it. Morning you are answering, now 2-3 questions I asked, nobody was answering.
Booking
Forward contract.
Very good, excellent. You have to, very good. I am satisfied. Otherwise, I was feeling depressed. 1 or 2 questions you did not answer. Hedged means you should book a forward. Very good. And natural hedges, you should have your own proceeds from where you have category. That is natural hedging. I have got a payment of 1 million to pay it. Suppose I have got export proceeds that is due to receive 1 million. I can pay the proceeds out of it. So that is natural hedging. And trade credit is buyer's credit and supplier's credit. It will be maximum period is 3 years. But normally the buyer's credit and supplier's credit, that will be only for short period, 6 months. And buyer's credit and supplier's credit, both are credit that is availed from the overseas bank. The difference is only in respect of who is arranging the credit. If the foreign supplier or the exporter is arranging a credit for the importer in India, that is known as the supplier credit. It is from overseas bank, it is in foreign currency. Instead, if the credit is arranged at overseas, same overseas bank, but not the same bank, different bank, but only overseas. But if it is arranged by the buyer or the importer's bank in India, then it is known as buyer's credit. Actually, the chart and technicality are totally different. The flow are different, but we are not, they will not ask for the exam. So far, they have not asked in respect, but even then we don't want to take a risk, I will tell. In supplier's credit, it is arranged by the supplier or the overseas exporter. So it is his responsibility that if the credit is not paid by the importer, supplier has to pay it. Because it is at the request of the supplier, the foreign bank is advancing the amount. So in case that Indian party is not making the payment, the supplier's responsibility, he has to pay. So naturally, he will request for an LC. That is enough. How that operates and all, the functional chart is very interesting, but we do not want it. But only that is extra. We do not want to take any risks. That is why we just go across the borders for 1 or 2 questions. Buyer's credit here, it is, suppose I have got I am the bank, State Bank of India. My client is the importer. He is requesting a credit. So naturally, I will be arranging the credit through my dash bank. Can you fill up that bank blank?
Correspondent.
Very good, excellent. I will be arranging the credit through correspondent bank. And correspondent bank and myself have got very good relationship. So naturally, they will not ask for an LC. It is enough. I give a letter of undertaking, LOU or letter of comfort. This is what actually happened in Nirav Modi case. So we can give that based on the assurance. They will give the credit. If naturally letter of undertaking says if the party doesn't make the payment, we will make the payment. So that is buyer credit. That's the difference between these two. And here the examination they will ask. Here the automatic route is up to 150 for oil, gas, refining, marketing. And if it is more than all others, it is 50 million. I think 2-3 times they were asking this 50 million under automatic route. And above this, it is approval. And here the cost interest factor is whatever is the benchmark rate, that plus 2.5%. Here there is no relaxation like this. There is nothing is there. And period is 3 years for capital goods. And all non-capital goods, it depends upon maximum 1 year, depending upon the nature of the product. That's why that is written as operating cycle. And goods under buyer's credit and supplier's credit are unpaid stock. Unpaid stock, you should be, that comes in the credit. It is very, very important. Why? Because double finance, you should not, duplicate of finance should not be done. Then
Sir, ECP up to 1 year, sir. ECP,
normally
ECP up to 1 year.
Which one? Can you repeat?
ECP up to 1 year or trade credit up to 1 year, sir.
Depending upon that, whichever is less. Normally, the operating cycle for such books will be less than 1 year. Otherwise, maximum only 1 year. Whichever is less, that is why it is better. Okay. So, if your operating cycle comes only for 6 months, the period will be only for 6 months. But capital goods maximum. These are all maximum period. Somebody was
can you explain this bias credit once again, sir? Bias credit.
Bias credit is arranged. Suppose your customer is an importer, he want a credit, so you are the his banker. You will arrange the credit through a overseas bank, correspondent bank. On behalf, you will issue a letter of comfort or letter of undertaking to that bank. Based on that, they will release the credit to the importer. Okay. If it doesn't make the payment, it is your responsibility. Failure, we have to make the payment. That is what Punjab National Bank is. After the examination, because earlier I was taking classes on frauds in foreign exchange. For that, I was exhaustively. After the examination, we will be free. At that time, read that what happened to Punjab National Bank. It was really interesting. And the period, okay, right. Then next is FEMA remittances. These are all that comes in the FEMA rules. Schedule 1 is transactions via private lottery, winning, raffling. These are all we should not permit the remittance for that purpose. Schedule 2, approved from the government. I was telling you, dance party comes, we can release the payment after getting the permission from the Ministry of Cultural Affairs. Most of the comes find a place in Schedule 3. Now earlier, each and everything different limits were there. Now liberalized LRS is liberalized remittance scheme. Anybody comes up to $250,000, we can release. And for Nepal and Bhutan, there is a limit of 25,000. Is 25,000 for currency 100 rupee note. If it is small denomination, the limit is not there. Actually, the limit is not. The 25,000 is only for. I told you, foreign currency is not permitted. Only INR is permitted. So limit is 25,000 for notes 100 and above. Now there are everything is 500 only now. Foreign currency notes can be. This is suppose a person is going abroad, he will be requesting for foreign currency. That they will ask in the examination. Libya and Iraq up to $5,000, and if it is for Hajj pilgrims or Russia or Republic of Commonwealth of what is this? Russia, Iran, Hajj. There it is entire limit can be given. All others, entire limit means what is this? 250,000. Full eligibility is 250,000 for travel to Russia or Iran. Then all others $3,000. Suppose you are going to United States, USA on your LFC something, you are eligible only for $3,000. And as I said in the morning, every limit is equated only in dollars. If it is any other currency, equivalent of this. Unspent to be currented within 180 days. A person returns. Hello?
Yes, sir. USD full eligibility for travel to Russia is how much, sir?
250,000. Full eligibility. This amount.
Okay.
This resident can retain up to 2,000 currency. You can keep with yourself. If you want, you can credit to RFC account. Coins, there is no limit. These are only in respect of remittances. Then another question is that whenever a person is returning, he should not hold more than this. If the notes are more than 5,000, he should get a currency declaration form from the customs. And if the traveler's check is more than 10,000, limit is 10,000, of which the currency note is 5,000. That is how the RBI circular says. Or this both put together, it should not exceed 10,000. So currency declaration form also they will ask. Every time they ask in the examination. These are a very simple thing. And import and export of INR already have told you INR. Import and export doesn't mean trade activity. This is only the actual cash that you carry when you travel abroad. That's the meaning. And liberalized remittance scheme. This is for all individuals, including minors, up to 250,000 we can give. This is permitted for all current account and capital account transaction. And these are all the purposes. I will share the slide. And only the three things there is a difference. Immigration, medical, and study abroad. There, actually, suppose they are giving an invoice. If it is more than this, you can permit that. Or 250,000, whichever is higher. Suppose a person is going for medical treatment. Suppose his costing is $500,000. We can issue that $500,000. Whichever is higher. Estimate or 250,000. You should imagine $250,000 into 83 rupees. How much it comes that you should have an account with you. You should not give a credit. You should not give a loan for sending the LRS. Form A2 should be submitted to a designated branch, and you should not give a loan for these purposes. Morning I have discussed you that is if you not this is not that, sorry. If that is even under this scheme, we are permitted you to give a loan to a close relative. We can give by LRS. Only that he should repay within 1 year without interest. Morning we have discussed cheat fund, nidhi, company, plantation, real estate. We should not give loan. Loan should be credited to NR account. Form A2 about 25,000 already you can. LRS is only for individuals, not for corporate or anybody. Another is case study on export. Case study, just simple. This is only you can just go through that. Any doubt is there, you can ask. No problem. This is only simple problem. These are all in the Macmillan test. I have taken everything only from the Macmillan test. Then last slide we will see. Just we will try to finish within 10 minutes. I am fully aware of you.
Immigration means what, sir? Immigration.
Immigration means properly recording a person's entrance and exit from the country. So they suppose in country they will be asking for more formalities will be there. There you can depending upon that country's requirement.
Sir, under LRS scheme, someone can send the money for purchasing the shares?
No.
Because there was a question in ABM last Sunday, there was a question whether it can be capitalized or.
But actually, that is I was wrong. Even when it is permitted for all capital account and current account transaction, that purchase of shares comes under the capital account category. It is permitted. But that should be an answer, I think, because that can be when you mention that capital account, then only suddenly it clicked to me. In ABM, how comes in that these are all coming in the ABC that.
Sir, how much a person can borrow from abroad? The maximum limit is to 2.5?
7.5, we have seen 750 billion external commercial borrowings. No limit, actually no limit. Without referring to RBI, we can, as authorized dealer, we can permit $750 million. $750 million. Above that, we have to require the RBI permission.
It is increased to 1,500.
For the time being, that I told you.
$750 million or $1 billion?
MIO, million. 750 million. Okay. That is a huge amount. And the last one, ECG side, I will just, these are all theoretical only. We don't want to waste the time on it. I will, already I think I have shared, except that additional on export, the import finance only I have added. All other things already as requested Mr. Baiju, I have already shared that. Please go through that. This is FEDI rules. I will just summarize that. This is the total of all the things that we have studied so far. And hours of rule 1, there are 8 rules are there. Rule 1 says hours of business 9 to 5. Normally after 4:30 we will not be doing because we will not be able to cover the transaction. If we want to do transaction after 5 o'clock, we should have a board approved policy. Okay.
Screen is not
what?
Screen is not.
Screen is not visible, sir. Screen is not.
So that is why every time I am asking. Very good. Sorry. Visibility. Okay, right. I will repeat that. No problem. Yes, hours of business rule 1 FEDI rules. Trading hour is 9 to 5. So if you want to do trading after 5 o'clock, you should have a board approved policy. Customer transaction up to 4:30 because after 4:30 you will not be able to cover it in the market. Cut-off time is not for cross-currency transaction. This is also subject to board policy. Saturday, Sunday is a holiday, and any holiday that is known prior to 3 days, at least minimum 3 days gap is there, then it is a known holiday. Other holidays are suddenly declared holiday. Can anybody tell me what is the rationale behind fixing 3 days? Why FEDI has picked 3 days? Can you tell me? Spot. Very good. Very good. Spot. Excellent. Very good. Spot. Very good. You will all pass. Export transaction, same the purchase discounting, we have to take bills buying rate or contracted rate. Very good. This is a question will be asked. Suppose a customer want to export transaction, export bill is discounted at following rate. Option A, bill buying. Option B, contract rate. Option C, bill buying or contracted rate. Bill buying is correct, contract rate is correct. But more correct is bill buying or contract rate. Because he can book a forward. We don't know whether he has booked a forward or not. So that is ticklish issue. When you write that examination, export transaction already we have studied in the class. Bill buying rate is correct. Okay, that is correct. Contract rate also is correct. But another rate is there. Option C is there. Bill buying or contract rate. So this is more pertinent for it. That way you should be very careful. Okay. If you write bill buying, that is correct. But that third is, this is more appropriate. So crystallization aspect, bank policy, and it should be done at CT selling rate. Already we have seen. Normal transit period also is 25 days interest. Notional due date, notional due date is 25 days Susan plus Susans. And for a fixed due date bill, only Susans is there because the amount is fixed. Okay, right. And what I will do is, if we can go through this, I will try to frame some questions tomorrow. And if you are interested, we can discuss some questions also tomorrow, as you say. Otherwise, we will proceed with the treasury.
We will discuss.
Okay. Then I will prepare some questions. So that, but just read that, familiarize that. Rule 3 is import transaction. There also bill selling. Anything with bill selling, import, bill selling or contract rate. Crystallization as per bond policy. Clean instrument, that instrument is inward. For inward, you will be applying what? TT buying. For outward, applying TT selling. Here the important question is, up to $10,000, you can convert it without referring to the customer. But unless there is, suppose there is no instruction to the contrary. Suppose he says that I have sent $2,000 for purpose of SNR account, then you should not convert. Otherwise, if no specific instruction is there, up to $10,000, you are in order in converting without referring to the customer. Otherwise, it will again, you may have to convert, that will incur a loss. Because you will naturally, you will be doing a TT buying and TT selling, the rate is different. So it will put you loss. This is very important. Within 2 days of credit to nostrum, we have to part with the funds. Forex contracts also, if it is 1 month, the meaning of 1 month is either month beginning to month beginning, 1st January to 1st February, or month end to month end, January 31st to 28th or 29th February. Suppose it is mentioned 18th January means 18th January to 17th February. It cannot be 18th January to 18th or 19th February. That is what we call it crossover. This is a normal practice accepted in the interbank market. That is the point. And we follow direct code. Morning we have seen for the merchant, that is as per the FEDI rules. Early delivery. Whenever early delivery question is that automatic cancellation, any cancellation is done prior to the due date, whatever is the profit or loss, we have to transfer to the customer. Any cancellation done prior to the due delivery, we have to pay the profit or loss to the customer. Automatic cancellation is on the 3rd day. There we will pass only the loss. Profit any will not be passed on. In respect of early delivery, suppose I have booked a contract on January 1. It is for 3 months. That is 31st March. Assume specific day March 31st. Assume that monthly premium is 1 rupee per month. January 1 rupee, February 1 rupee, March 1 rupee. So January, February, March, total 3 rupees. You assume the delivery is fixed day, 31st March. Suppose the spot on January 1st is say 80 rupees. What is the forward rate I will be quoting for the forward purchase contract? Forward premium is 1 plus 1 plus 1, 3 rupees. Spot on January 1 is 80 rupees. So what is the forward rate I will be quoting to the customer? Can you tell me?
2 rupees. Extra 2 rupees.
Huh?
83.
83. 80 plus 3, 83. Fixed day, January 31st. So we will pass on the premium up to 31st. So January, February, March, 1 plus 1 plus 1, 2, 1 plus 1, 2, 2 plus 1, 3. So spot is 80, 80 plus 3, 83, we will be booking that contract. Suppose he is delivering the contract January 31st. So unexpired portion is 2 months. So we will deduct that premium. 1 plus 1, 2 rupees we will deduct from 83, 83 minus 2, 81. We will pay to the customer only 81. So in respect of early delivery, premium in respect of the unexpired month will be deducted. Okay. Then what we require actually, whenever a customer is doing a forward, already you would have done a forward sale contract. So that is due only in 31st March. But now the customer has given the fund in what January end itself. So there is a gap. You are having the fund January 31st. You require the fund only in March 31st. 2 months gap, you will do a swap. Whatever cost that is involved, that is known as swap cost, that will be taken or collected from the customer. That is the point. Next. FDI rules, business through intermediaries, brokers. Morning we have discussed. And interbank settlement is blade settlement. 2% above if it is INR, MIBOR overnight rate. If it is pound sterling, the base rate of Barclays Bank plus 2%. If it is dollar, it is Citibank's rate. So this is all about that is enough. And now we will go for, we have finished that, we will go for your doubt clarification.
Sir, for crystallization, like if you are not receiving the money on the maturity due date, like how many days the crystallization?
As per the bank's policy. Earlier export it was 30 days, import 10 days. Now as per the discretion of the bank. So if they ask in the examination, you write stated policy of the bank. That will be in their answer because it is objective. No? So the stated policy of the bank. For your academic interest, see, familiarize with the bank because I was in State Bank. There it was depending upon the customer has got grading was there. So good customer, they were giving more period. Like that it was there. That will differ from bank to bank. So the differences in the banks, they will not ask this. For export bill, it is TT buying rate and not TT buying rate. Okay, already I have told. Fully repatriable or partial, which one the RFC is, once he gets back that status, full amount is repatriable. There is no limit. Full amount is repatriable. Then don't scribble please. Okay. Personal discount. Usan's will purchase discount. And sir, I think it is 369 days if the loan is foreign currency, it's not. Okay, I will refer. Thank you. Because I told you I was not. But what is the rationale being 369? I do not know. Foreign currency. Okay, I will verify. Okay, thank you. And change from foreign currency is swap. Yes. Foreign currency is swap. Screen not visible. Fully repatriable or partial. Which one? RFC, I have told you it is fully repatriable. Now we can go for any questions you have to ask. Late hours, I know. And you have got one more session to